Welcome to Financial Clinic, your ultimate guide to achieving financial success. Proudly sponsored by NCBA Bank. Join Sally Limo as she expertly shares invaluable tips and insights designed to empower you in reaching both your personal, business, and financial goals with NCBA Bank. Your journey to a brighter financial future starts here.
NCBA. Go for it.
My name is Philip Omondi, and I head property finance sales at NCBA. My role at NCBA basically involves developing our mortgage and construction book within the retail banking space. And beyond that, my role also oversees management of property finance products across all networks. Basically, we'll just be highlighting the key benefits of taking a home loan solution with NCBA Bank. Beyond that, we'll equally be highlighting how we help customers to identify properties, basically through the developers that we've partnered with across the Republic. Beyond that, for customers who are interested to do construction, we have our in-house experts whom we then assign to you as a customer. We'll discuss areas of how our experts internally can actually help you to navigate that process, be it that you want to construct on your own, or if in case you want the bank to provide you with end-to-end, meaning we provide you with finance, we provide you with the professionals, up to and including supervision to the tail end. Tune in to Financial Clinic to learn more about making home ownership a reality.
Twende mbele. NCBA. Go for it.
A very good morning this beautiful Wednesday morning where we discuss matters finances on Financial Clinic this morning. I'm super excited because the topic really is going to impact your life and my life today as we get to learn about home ownership in Kenya, both in the rural, urban, as a young person, as an old person, just to get that security, Owning home, I think, gives you some sense of security, isn't it? So this morning, I'm joined by an expert from NCBA Bank who will be talking to us and taking us through, the process of owning a home. If you have any question that you may want to just pose to him, please be on standby, take your notebook, take your pen, and get to learn. Join me on this conversation on 20316, which is our SMS line. 0786 316 316 is our WhatsApp line, and we'll be able to flow together in this topic on home ownership. With me in studio is Philip Omondi. He's going to introduce himself to us. Karibu sana.
Thank you, Sally. I'm more than excited to be here this morning.
Yeah.
And thank you for giving us the opportunity to speak to Kenyans regarding home ownership. As you've mentioned, my name is Philip Omondi. I head property finance sales at NCBA.
Okay.
Yes.
And because we're here speaking about home ownership, Philip, then maybe to just start us off. So are there different ways of owning a home, at NCBA? Are there different methods?
Certainly, yes. As a customer, you have the opportunity to own a home through straight purchase, meaning you go out there and identify an already built unit, and NCBA will support you through the process of acquisition. You could be a customer who already owns land and you're interested in construction.
Okay.
So NCBA will come in to provide you with finance to construct that dream house of yours.
Okay.
Thirdly is you could be in between. You have a dream place you want to build your house. Let's say, for example, in Ruiru, Kamaki's area, you've identified land and the NCBA comes in to help you to purchase the piece of land and subsequently give you money to construct. So it's a buy and build sort of like facility. Fourth is by way of a customer who is not really savvy about going through the murky waters of construction.
Right.
But then you're telling yourself, can NCBA support me with finance, with the professionals, and obviously supervise the project for me? So we have a product that actually provides customers with that comfort, called Easy Build.
Isabel, does that one, which one suits best the diaspora? Just,
Yeah, for diaspora, they would more or less, you've had stories of diaspora customers remitting money home. A photo is taken of a totally different house, and you come to the ground and you realize,
the specific photos of the units that was being constructed is not actually mine.
Right.
You find bare land. So our NCBA Easy Build product actually helps our diaspora customers who are interested to construct.
Okay.
We have our first project we did in Kilifi,
right,
for a diaspora customer. I think the project costed roughly about 9 million. So obviously what we did is we had a meeting with this customer. We gave this customer the off-the-shelf designs to choose from, because this product actually offers that flexibility. And then we introduced the customer to the consortium. So the consortium basically comprises of an architect, a quantity surveyor, engineers, and everybody who is involved in construction. So we do everything end to end, up to and including taking your plans to county for approvals and supervising the project for you. And all you need to do is wait for 9 months and we hand over the keys to you.
You just sit pretty. Oh,
Pretty,
wow, fantastic,
yeah.
fantastic. But probably before we get deeper into the conversation,
Sure.
Would you take us through the process of securing a home loan or a mortgage in that matter?
Good. So we make it very simple. Typically a mortgage process takes about 6 steps, to be precise. We first off begin with pre-qualification, and under pre-qualification we basically, I tell you, Sally, show me your payslip if you're employed. I'm able to run through and check how much can your payslip support in terms of repayments.
Right.
If you're in business, we look at your bank statements to look at how much can your business support in terms of mortgage repayments.
Right.
If you're happy with the amounts we've communicated to you during the pre-qualification process, we jump into the application process, where we take you through the process of, filling in the documentation. Then thereafter, your facility is approved. We give you an offer letter. The offer letter will basically highlight the terms of the loan, the conditions that you're supposed to meet. Thereafter, after you've signed the offer letter, you return it to the bank. We then proceed to invite a valuer appointed and approved by the bank to inspect the unit you're buying, to just check that the price is accurate, verify ownership in terms of doing searches. Then last but not least is the legal process, which we normally call security perfection process. And herein we invite a bank approved valuer again, lawyer again, to facilitate the process of helping us to register what we call a legal charge. So if you're buying a property, the lawyer will facilitate movement, of documents from the bank to the vendor's lawyers who are selling the property to you. If you are doing construction, the bank will invite you to the lawyer's bank. The lawyer representing the bank will ask you to surrender your original title so that we register the charge. A charge basically means we are registering our interest on the title for up to the extent of the loan amount that has been advanced to you. After we complete that process, all that process happens at land's office within the various jurisdiction where your parcel of land sits. And once the documents come back to the bank, then we disburse the facility. We disburse the funds to the vendor if in case you're purchasing a unit, and if you're doing construction, we then provide you with, we advance the money to your account.
Right.
Yeah.
So, you started by saying you first look at my payslip, for example.
Yes.
Let's look at the younger generation,
Yes.
or even the middle class, someone who's coming in, they don't have a payslip, these young people, or they're in the orange economy, for freelancing. So what happens in that case? Do you lock them out?
No, we don't, because our interest is to review income that you can document, and verifiable income is what we refer. Because you see, at the end of the day, if you tell me you're earning, if you're a freelancer, for example, Sally, you're a freelancer, and you tell me you earn 200,000 every month, I need to see that going into an M-Pesa statement. I need to see that going into a bank statement. So much so that I'm able to pick that and do an analysis to determine how much can that income support in terms of loan repayment. So verification is usually key for us in the pre-qualification process, so that we're able to determine how much that income can support at the end of the day.
Okay. Yeah. And so what kind of interest rates should potential homeowners be expecting then?
When you take up a facility with NCBA, a mortgage facility to be precise, with NCBA, we have two types of interest rates that a borrower will be faced with. One is you have the option of a variable interest rate, and the variable interest rate actually adjusts. This is the type of interest that adjusts to central bank rate. I know from time to time you hear Monetary Policy Committee has said they've reviewed the rate downwards, so the expectation is banks are expected to respond. So that particular interest rate is affected by that particular central bank rate. Then we have our fixed rate home loan solution, which we are currently offering in collaboration with Kenya Mortgage Refinance Company to support the affordable housing agenda. And this is a rate provided to you at a fixed rate over the duration of the facility.
Okay.
Yes.
And what are some of the eligibility requirements that probably one needs to even meet before getting that approval?
First is you must have a steady income. You must have a good credit history.
Okay.
Then thirdly is there are instances where we do not finance up to 100%. So the expectation is that as a customer, we would expect you to have some sort of deposit that would be required. For example, if you're making a purchase and we tell you you need to raise up to 20%, especially for our diaspora customers, let me use that as an example, where we finance up to 80%. So they'll be expected to raise 20% deposit. And then, of course, age limit is a key eligibility criteria, because for those who are in business, we subject the tenure of the facility up to a maximum of 65 years. But for those who are in employment, we look at maximum retirement age of we actually subject it to your retirement age as provided by your employer.
Okay.
Yes. So if it's 60 and you're 30, obviously you can get up to 25 years. If you're 40 and your retirement age is 60, maximum would be around 90. If you're in business and you're 50, max would be around 9 or 10 years to be precise. Yes.
Okay. And then, so how does NCBA then support different customers who come in with varying financial situations? For example, a first timer. I'm coming in as a first timer trying to secure or buy a home.
For first timers, what we basically do is first we offer advisory services, because they come not knowing exactly where they want to position themselves.
Right.
I've had situations where a customer comes and says, I'm single, I want to buy a 4-bedroom house. So you ask them who will occupy the other rooms. So unless you have intentions to grow your family in the next 1 year, so then now it makes it easier for us to have that conversation. So the advisory role goes beyond just offering you that mortgage facility. For those who are interested in taking a construction loan, we have our in-house experts. But there, Sally, can I surprise you? Back then in 2016, when I decided to venture into my own construction, I sat and I told myself that with 5 million, I can actually deliver a 4-bedroom mansionette. Surprisingly, I wasn't able to achieve that. I go to the lintel and, I'm like, okay, where exactly am I going to get the rest of the money? Because I didn't engage the right experts. Because to date, you find scenarios where a customer tells you, with 5 million, I know I can deliver this house. But there's just more to it that goes into construction. There's the aspect of dealing with professionals. There's the aspect of costs of, the cost of facilitating that transaction. And then the size of the house ultimately will determine the total cost of delivering that house. And early this year, I remember there's a customer who walked up to our doors and she told me she came with her husband, and they said we are buying a plot in Syokimau, and it's an eighth. We're interested to do construction, and they came up with a plan that would cost them 13 million to deliver. So we do just like eligibility, verify income,
Yeah.
check, we confirm they only qualify for 6.5. And they come back to us and say, where are we going to get the rest of the 7 million? I was bold enough to tell them, look, let's cut your quote according to your size.
Right.
Go back to your architect to draw up a design that can fit your income profile. You know, so they were happy at the end of the day. They reduced their dream to a certain extent.
Yeah.
But they told us that they'll use the 6.5 to just build a house that is habitable. It was a nice two-bedroom all-en-suite bungalow. And over time, when their income improves, they'll be able to, over and above offering advisory services to our customers. We also partnered with developers, about 104 across the Republic, where if you know you're a customer, you're looking for a house, you can actually have the opportunity to engage one of our developers. Then thirdly, for a first-time home buyer, you notice if you're purchasing a house, you need to raise a deposit, which would probably oscillate between 10% to 20%. Beyond that, you need an additional 7 to 10% to cater for the cost of facilitating this transaction. And this cost to basically cut across facility fees, stamp duty, legal fees, valuation fees. You know, if you're buying a house, for example, costing 10 million, you need, number one, a deposit of 10%, which is $1 million shillings. Secondly, you'll need another 800 to 900 to cater for this. So 1.8. So if you don't have this deposit with you, what happens? You'll run to your SACCO, or you'll run to, you know, if you don't have the savings or you don't have an asset to dispose, you'd have to get this money from. So it's like you're taking a loan to facilitate another
one.
So we have a product called 105% financing that helps to, one, as a bank, we give you 100% to purchase, to cater for the price of the house. We add you an additional 1% to cater for legal fee and 4% to cater for stamp duty. So you notice the 10%, the 7 to 10% that you're expected to raise to cater for the cost. We've reduced it by that component of 5%. So technically you'll be raising roughly about 4 to 5%.
Right.
And you'll not raise a deposit towards that particular purchase. But the key thing is, in as much as the bank is financing the full 105, your income should be able to, cushion repayment for that facility.
Okay.
Yeah.
You talked about partnerships and, collaborations. Probably you may just want to mention, are you in partnership with the government? Which developers, if it's okay to mention them?
Not to be biased, we have quite a number.
Okay.
What we normally do is to give the same level playing field to all our developers. We have a property listing that we've carved out of these partnerships, and we are more than willing to share that with our listeners and our viewers this morning, so that they have the opportunity to just see some of the projects that NCBA, or if you could log on to our website, you'll be able to, under property finance, under partnership, you'll be able to see the different developers that we've partnered with. In terms of partnerships beyond developers, we've partnered with Kenya Mortgage Refinance Company to offer single-digit interest rates to deserving Kenyans, and of course for that particular product, that particular partnership gives us the opportunity to offer customers up to a maximum of 10 million for purchasing a house or constructing a house for your own occupation, and the interest rates applicable therein is 9.5% for 20 years and 9.9% for loan tenors of up to 25 years.
Okay, with the home ownership conversation, we cannot do that without involving Kenyans. And so yesterday we went out to the streets and we wanted just to hear what Kenyans have to say about, home ownership. Is it easy for them? Can they access those mortgages from banks? And here is what they had to say.
In today's ever-changing housing market, owning a home is a dream for many. But behind the glossy ads and pristine show homes lies a harsh reality. Rising costs, stricter bank requirements, and an ever-competitive market are creating roadblocks for hopeful buyers. Today, we explore why many are left feeling sidelined from the dream of owning a home.
Owning a house ni cheaper. Manake mimi yangu binafsi naweza tumia either miti ama nitumie mawe. Nimetengeza matofali kuja cost me 10,000 kujenga, maybe itanichukua maybe 50, tayari almost 200 nitakuwa nimemaliza nyumba. Mortgages ndio nimekwambia ndio inanyanyasa raia. Kwa ajili mortgages unasikia ni milioni 3. Na tunaona hii yangu hii nimejengea hata itafika milioni.
Affordable houses before zijengwe wanafaa kuonyesha watu vile wanafanya. Wacha vile walisema. Wanasema serikali haina pesa. Kama serikali haina pesa, utabomoaje nyumba kama hujaonyesha watu pali wataenda?
These voices echo a growing sentiment, a struggle not just for a property, but for stability and security. Meanwhile, the supply side is also under pressure. With rising costs of materials and labor shortages, the dream of building a home is met with challenges every step of the way. Yet, amid these challenges, there is hope. Community initiatives, innovative financing options, and new housing policies are slowly beginning to bridge the gap, rekindling the dream for many. Home ownership may be more challenging than ever, but the dream lives on. By understanding the issues and working together, communities can pave way for a future where every dreamer finds a place to call home.
Matumaini, tujitahidi, tujivunie, tuendelee mbele, tuende mbele.
Kenya.
Tuendelee.
Twende mbele. NCBA. Go for it.
Yeah, as the song says, tuendelee mbele, NCBA, go for it. Indeed, we are going for those houses, we're going for those homes with NCBA as you partner with us on Family TV. If you're joining us as well, just get to know that this is your opportunity to own property today, to own a beautiful home. So engage us in this conversation on 20316, which is our SMS line, or 0786 316 316 is our WhatsApp line. Philip, when we listen to that clip, I've had this woman saying, with 200,000 bob, he's been able to put up a home, and mortgages are so hard to come by for them. What is your take on that? I think that's what many Kenyans probably feel, when it comes to just securing a home loan or a mortgage. What's your take on that?
It's true because if you move away from your typical brick and mortar, where you're saying, your typical mortar, and you say you want to use alternative technology to deliver a house, then you can actually deliver it in a cheaper way. Some years back, you heard about alternative technology,
yes,
where there was a big push to construct houses using what we call polystyrene, expanded polystyrene technology, EPS to be precise. And EPS is basically your kind of material. You see, when you buy your electronic gadget, there's the white thing that's used to just secure your electronic gadget. So the houses that are built using that in Kenya today that have been built using that technology, And of course, of late, we've heard about precast, where you basically have a structure and you bring your a precast slab to just fit them together to actually be able to deliver a house. Actually, the major cost, the major issue that Kenyans face today, if in case they want to build a house, is the cost of materials. Every day you wake up, the cost of sand has gone up. The cost of cement has gone up. I think when I was building my own house, the cost of cement was 580. Currently, if you were to buy cement, it would retail at what, 700, 800?
Or 800, right.
So there are dynamics that actually feed into the cost of construction. And we are not saying mortgage is expensive. If you bring us a project proposal of even 1 million shillings and you tell us that this is what my dream is, to build a house going for 1 million shillings, NCBA will be happy to support you through the process. The only point of divergence is when it comes to purchase. Because you see, if a developer is selling a house, if they've taken a facility, they factor in a number of costs to be able to realize their margins in that particular sale. So for construction, I would say if you bring to us a proposal that actually fits your ideal budget, we are not saying we are only funding projects of 10, 15, 13, 100 million. No, even if you come up with a project proposal of 2 million and the kind of materials that the gentleman has talked about will be able to deliver your deal type of house, then why not? We'll be able to and be happy to support you through the process. Yeah.
Well, so how because someone talked about in the clip about the affordable housing, that's probably under the Big Four agenda in the government. So how does that influence you as NCBA probably to just your approach to property finance?
Yeah, so when affordable housing agenda was launched sometime in to support the Big Four agenda, Boma Yangu was actually crafted out of it. So today, if you were to know which are these houses that the government is putting up for sale or for interested Kenyans to be able to take advantage of, you basically need to log on to bomayangu.go.ke. Once you log in there, you'll be able to select a unit. Of course, you have to go through the process of registering. Once you register, then you start saving, then wait to be allocated a unit. They have a criteria that they use to allocate those units. So then now how we plug in as NCBA is once you are allocated a unit, of course there's a deposit requirement that you have to meet for you to be allocated a unit, then you basically come to us. So take the government as quote unquote your developer of the modern day. So they are selling, they have the product, we have the money. So we basically help you to secure a unit under the affordable housing program. So they are basically, the government came in with the affordable housing agenda to basically support the supply side of that equation.
Let's talk about innovative financial solutions, which probably may include the green building technology. Does NCBA have anything or close to that?
Yeah, we currently have a team working on crafting a green mortgage product. And when we are ready, we'll be able to actually launch that. But green, especially for someone who is doing construction, you can actually incorporate green technology into your building. And I think before I actually ventured into property finance space, for me green would be having flowers all over the place. And I remember we were at a forum with Kenya KPDA, Kenya Property Developers Association. They organized a forum in collaboration with IFC. And I think one of the key things they tried to highlight, and they showed us different buildings across the Republic, greenhouse being one of them. So if you compare greenhouse with any other building in Nairobi, so the whole essence is what is your window to wall ratio? For example, if you're doing construction, are you incorporating energy saving solutions like, you know, to move away from your typical lighting solutions that are offered? Are you incorporating things like water reticulation and all that? Are you any wastewater coming out of your house? Are you like recycling it back to use it for watering your gardens and all that? So green can take many aspects and forms, provided you're able to incorporate those typical solutions to be able to make your building, as in like self-sustainable. Yeah, I think the first house I stayed in Nairobi, I had to, during the day you can't, even if you have all the windows open, you have to sustain yourself with light all through. But you see that moves away from what we are then now discussing here today. If you have the opportunity to do construction on your own, you're able to incorporate all this into your building, so that to give your building
which comes with the benefit of cost efficiency.
Exactly, yeah, because if you're able to install solar, provide energy solutions, so meaning you're going to save on electricity costs. If you're able to save water, be able to recycle, you don't have to like use fresh water every other time to water your plants and all that, you know, if you have a garden or any other plantation that you have within your compound.
Fantastic. I'm just seeing someone here who said, hi Sally and Phil. Sally, kindly ask if this includes rentals and at what percentage will they share rent with the owner?
So for rentals, rentals doesn't, we don't factor rentals under the affordable housing program, because affordable basically allows home ownership through purchase or construction for someone who wants to occupy the house. I mean, for those who are occupying the house.
Right.
Yeah, so if you want rentals, then the conversation changes. So today you walk up to any one of our branches and you talk to our experts and say, I have a plot in Kasarani, I want to put up my rentals. How can NCBA support me through this journey? So key thing is, one, we'll finance you up to a maximum of 70% of the total cost, be it that you want to construct or purchase. Then the rent that comes from that building, we don't take 100% of it. We only take up to a maximum of 70% of the rent. And of course, occupancy is key to us, because you notice if you're telling us that we are going to use the rent to repay your facility. What happens if the building is 50% occupied?
Right.
Where do you fall back to? So technically, for customers who walk into our doors with a request to support the purchase or construction for rental purposes, we normally say you must have at least existing income to be able to support or to cushion repayments, assuming you don't have occupancy. If you recall what happened during COVID times.
You know, we have a lot of institutions, banks out there that are offering mortgages, but do you think as NCBA you've positioned yourself as the best in the market to just walk this journey with your customers to owning a home?
So currently we are leveraging on digital banking to offer mortgages to our customers. As we speak, we actually piloting a process where we actually allowing our customers to execute offer letters online, meaning you'll get an approval. We'll actually have an opportunity where our customers will be able to apply for mortgage facilities online, get an approval on within the defined period, and you'll be asked to sign your offer letter digitally. Yeah, because you can imagine if you're in the diaspora, you'd be expected to, one, courier the documents. We produce the offer letter, then send that back to you. Secondly, how NCBA is positioning ourselves is we do not insist that you ought to have banked with us for a certain period for you to be able to take up a mortgage facility with us, you can actually walk into our doors today and apply for a mortgage facility, provided if you're in business. Once we approve the facility, obviously we have to ask you to move your business to us. If you're salaried, after your loan has been approved, of course we'll ask you to move your salary to us. Thirdly, like I mentioned, we have in-house experts which who are individuals whom we'll assign to you to help you through the process, especially for those who are looking at doing construction. And then thirdly is we offer competitive interest rates and very flexible terms out there in the market. Yes.
Okay. Yeah. Being the head of property finance, are you seeing this particular sector evolving, or has it evolved over the years? And with that, then, are there any changes with your customers' behavior, probably?
Yes, certainly. We've seen an increase in demand for affordable housing. In the clip, the gentleman actually indicated, mentioned something to do with affordable housing.
Right.
There's high demand for affordable housing units, obviously because of property prices escalating. Secondly, there is increasing demand for customers to be able to do things on the go. Like from the comfort of your seat, you're able to make an application for a facility. And NCBA is actually responding to that need. Then the other thing is for diaspora customers, we've seen quite a number of this particular group of Kenyans who are working and living abroad, investing in real estate. And I remember recently you hosted our head of diaspora banking, and I'm not sure if she mentioned that we also do diaspora trips to be able to, because you see, these are Kenyans who don't trust investing back at home. So unless you bring the services back, closer to them. And that's exactly what you're doing. And currently our diaspora banking team is in Australia. So if our viewers and our listeners have friends or relatives who live in Australia, you just follow our Facebook page and you'll be able to see which particular cities they'll be visiting and the timelines, so that you're able to interact with them. So these are some of the dynamics that you're seeing changing in the market today.
You've talked about the property prices escalating.
Yes.
Yet when you look, there's so many apartments out there. There's so many, they're vacant. What explains that? And then there's very low occupancy. Why is there a price escalation, yet there's also low occupancy on this other side? Why can't the prices just come down to be able to accommodate?
Depends on which side of town we are talking about. If you're looking at upmarket of Kilimani, Kileleshwa, you'll see quite a number of apartment buildings coming up. Obviously, because back in the day, Kilimani, Kileleshwa was not your ideal address. But what these developers have done is they're tapping into this market because they know quite a number of Kenyans would be more than interested to come and live in these addresses. If you look at the Eastlands area, the lower side, I'm told there are areas where a tenant moves out today and by evening somebody has moved in. So given that these particular spaces have where we're seeing apartments coming up, you typically know that when a developer is putting up a house for sale, what they're expected to have is legal documentation showing that after I sell this unit to you, you'll be able to, obtain occupancy. So for customers who are then now interested to take mortgages, they'll have to wait for the construction process to be complete. The developer then proceeds to acquire titles, sectional titles to be precise, so that then now the mortgage process can take shape. Now, that's the other bit. Then there's the other bit where the prices of these specific units, the developers who probably come up with projects, they've not done their feasibility study to know, is this product right for this market? So you're putting up, let's say, a one limit, for argument's sake, you go in the middle of Runda, let me use that as an example, and you want to put a 2-bedroom house.
Or a bed sitter.
So if you look at the dynamics of real estate. Look at Kitengela, for example. Are you seeing any developer putting up high-rise buildings?
No.
Yeah, so standalone houses. So your ideal situation should be you're basically putting up these particular residential spaces. If it's for purchase, then there's a particular target market that you're trying to address.
Okay.
Yes.
Okay.
Yes.
I'm just thinking of the young people, for example, the way we had talked about them earlier, but again, we go back to the young people who are trying to own homes, invest early and all that. Is there provision for them at NCBA Bank for probably crowdfunding? They come in as a team, a group of 5 or so, and then you're able to help them secure a home loan, for example.
Yeah, sure. So our interest is to encourage them to register an investment group.
Okay.
To be limited by shares, where you have all of them coming in as shareholders and directors. And this would help, because you see, when you register it as an entity, it's a going concern.
Okay.
Where you'd be able to even invite other members to equally buy shares into that. And we've seen buildings that have been purchased by such kind of groups. And again, also provided as an investment group, you're able to show track record of how much you've been raising per month in terms of your contribution, then it's a conversation we can have with these particular individuals. But the point of divergence would be if in case they're coming in as Sally, Philip, Nyagudhie, and Evelyn, the 5 of us, we are moving in and we're saying, you're employed, I'm employed, Sally's in business, the other. So you see, we have varying income profiles. So how to structure and bring in all of us together becomes a bit of a challenge.
Makes sense.
Yes.
Okay.
Yeah.
So how then do you also, let's also cater for the people in the rural areas.
Yes.
How do you ensure that your products probably get to them and your services?
Rural would be a bit of a stretch.
Okay.
Typically, if you look at setups within the western part of this country and certain parts of this country, rural homes are considered to be ancestral, to be precise.
Okay.
And if you look at aspects of, using this particular space as your own retirement home in the foreseeable future. Should anything happen to you, you'd probably say, I would want my burial rights to be, assigned to this particular space.
Yeah.
So we try as much as possible to avoid, not to avoid per se, but to only finance spaces within urban. Or if it's with the advent of county governments, we try as much as possible to work with areas where NCBA has presence. We have about 90 branches across the Republic. And then, of course, if you're talking about county governments, we try to restrict ourselves to areas where we have county government headquarters or municipalities as it used to be before county governments came into play. Yes.
All right.
Yeah, but if you're interested in investing in a space, let's say in your rural space, in your rural home, then what we'll do is, if you have another property that you can advance to the bank as security, we'll be able to finance you to acquire.
So the other question probably would be, can now this homeowner, so someone has come, they've secured the mortgage, now they own a home, just in case their financial situation probably changes, are they able to probably top up their loans or even sit with you guys again and probably renegotiate?
Yes, so financial situation is two-pronged. One, where you've lost income or your income has reduced.
Right.
Secondly is if your income improves. So we currently have a product called Equity Release that allows you to remortgage your home that you would provide it to NCBA security.
Yes.
So where we give you money against the value of your home, or if in case you own a piece of land, we can give you money against the value of your piece of land to be able to use that money to do something else. Of course, you have to show proof as per you have to actually show us that this is where the money is going to be spent.
Okay.
Secondly is if you have reduced income. You remember during COVID times, we had Kenyans who actually were on half pay, some were on unpaid leave.
Yeah.
And we offered relief to these particular customers, either freeze on interest payments or both principal plus interest, depending on the dynamics of what was reduced at that time or what you lost. And for Kenyans then now who have lost income permanently, if your house can fetch rent, why don't you have the house rented out?
Okay.
If the rent can actually sustain your mortgage repayments, you know. But then now if you have reduced income, and for example, if the income we used to assess your facility at the time of application was 100,000, your income has reduced to 50. So definitely, if your repayment is 60 or 70, you can't sustain that repayment.
You're
so
right.
we have an option to actually restructure, have a conversation with you. We have a team that will sit down, look at what you're proposing and be able to restructure your facility to fit your current income profile. And we do that by way of, if you're still in employment and your age or your retirement age can allow extension of the facility, then we'll be able to extend your facility. Yes.
And what would you tell probably someone who is out there watching or even listening, and they have the fear of probably the fluctuating interest rates and probably even potential hikes when it comes to the mortgage rates? What would you tell them or encourage them?
I was in that space, let me tell you, before I ventured into property finance.
Yeah.
And then I think what I would advise them is take that bold step.
Right.
Because day in, day out, things change. You wouldn't know what tomorrow holds for you. Take the bold step and own or acquire a piece of property. And while at it, convince yourself that if NCBA has granted me this facility for 20 years, I don't want to repay this facility for the full tenure.
Okay.
Every year I want to put a target that I want to reduce my principal. And subsequently, every principal reduction you make, you actually affect the overall interest that you are expected to pay at the end of it.
Right.
Yeah, and you can take a 20-year loan, a mortgage facility, and repay it in 5 years if you want to at no penalty.
Okay.
Yes.
Okay.
Yeah.
And probably, as NCBA, with digital space that we are in right now, how do you use technology and data just probably to understand the trends in the housing market, for example? Yeah.
So we do a lot of analysis even when we are coming up with products to know what fits the market, to be able to adjust, and we try as much as possible to be aware of what's happening in the market. With respect to digital space, we are currently having conversations around enabling our customers to be able to actually check their mortgage processes using their NCBA apps that will be made available to them for those who actually bank with us. We'll also have the opportunity for customers to be able to track and check their mortgage processes and be able to look at what are the current dynamics within the market. As we speak, we are working on initiating a literacy program to just educate customers about trends, how to invest, and we do this either way through even webinars that we normally organize for our customers, or if not directly from NCBA, we do so in collaboration with our developers or even our partners like MRC. Yes, to just be able to educate the public about what's out there for them to take advantage of.
So with all this, I'm sure there are risks involved. How do you assess those risks when it comes to financing a home then?
First, we try as much as possible to assess credit risk, and under credit risk, what you're basically looking at is your ability to repay that facility.
Okay.
Secondly is legal due diligence, just to verify home ownership. You remember in the mortgage process, we did say there is a security perfection process that is involved in the mortgage. So the role of that legal due diligence process is just to assess ownership.
Okay.
Yeah, if it's being sold to you, is the person selling it to you the right person? Just to avoid fraud. And then there is property valuation, which of course we undertake to verify the price of the unit. And you and I were not aware of riparian land. Were you?
No, until the other day. Yeah.
So basically the role of the valuer is to check, is this particular property you're acquiring within, is it on riparian land? Is it near a water body? Is it near a river? The other thing they check is it near a major road transport or railway transport corridor? Those are the kind of aspects that we assess actually way before we go into the legal process. And then the other risk we assess is employment income verification, because what we're interested in is your employment income steady, be it you're salaried or be it in your business, be it in business, because you notice the mortgage repayments will be on a monthly basis. So we would anticipate that the income should be able to cushion repayment of that facility over a period of time.
Okay. Yeah. Can an economic, situation in a country affect the property finance? At that particular time, can that economic situation affect property finance, buying or getting mortgage?
Yeah, if we have rising inflation, then of course cost of funds for us, so to speak, would be high, the cost of obtaining money, or if it's in the case of customers who are interested in doing construction, the cost of materials will definitely go up. Let me use inflation as an example. If you have a situation for a customer who is buying a unit, there's a developer who is selling that particular house, definitely the cost of materials rises. So in the likely event of an economic disturbance, or you definitely experience scenarios where cost of buying a unit actually goes up, and subsequently if you were to then come in and say you want to take up a mortgage, obviously the rate of interest you anticipate during that time would actually be higher as well.
All right. We're getting to the tail end of this conversation show this morning. Just speak to potential homeowners out there who are listening or even watching you. Speak to them directly.
All right. So to our listeners and to our viewers, if I leave you with this, if you do not own a property, then take the bold step to own one. If you already own one, then take the bold step to acquire a second one. And if you have two, acquire more than one, so that you're able to use the others as investment. Mortgage is not expensive, as they say. And I've heard scenarios where people say, if you take a mortgage, the cost of paying the house, the cost of the interest you pay will be double what you borrowed. But the thing I want to challenge you with is 15, 20 years ago, how much would 1,000 shillings purchase in a supermarket? Today, if you were to take 1,000 shillings and walk with it to a supermarket, I'm pretty sure you can't walk away with a bag of, only a bag of sugar and what? Shoe polish.
Something,
So typically, interest rates, when you pay your facility over a period of 20 years, technically you'll see that particular interest over 20 years will be double. Like if you take a loan of 10 million, you'll be required to pay 21 million bucks, or meaning 11 million. But notice, 11 million makes sense because 11 million.
Thank you very much. Thank you so much, Philip Omondi, for making time to be here. Beautiful conversation, great insights there. Asante sana. Thank you so much also to our viewers and listeners wherever you are, and also our partners. Remember, if you want to be part of this, beautiful, beautiful journey where you're supporting such content, then you can do that by sending in the word partner to 20316 or 0786 316 316, which is our WhatsApp line. And also, if you want to send your support, you can do that by sending on paybill number 316 316, and the account name shall be your telephone number. Thank you so much for creating time. God bless and keep you. See you again tomorrow on Matters Relationship. Goodbye for now.